shares of public sector undertakings or PSUs have returned to record high equity dividends to the central government for FY23. The government is expected to garner an all-time high dividend of Rs 63,056 crore from 67 listed PSUs for FY23, which is 25% higher than the previous fiscal. At the bourses, the Nifty PSE index notched a new high on June 21. Stocks such as HAL, PFC, Bell and Oil India have led this momentum, surging up to 51% over the last 6 months versus a 4% rise in the Nifty benchmark. Going forward, analysts expect the overall PSU space to do well, but suggest investors stick to a selective approach. Gaurav Dua of Sharekhan is bullish on public sector banks, but they have seen a strong upside in the last year, so investors should now be selective, he suggests. We are now more positive on financials such as PFC and REC and see a lot of value in oil marketing companies, as lower oil prices could lead to re-rating for these stocks. Railways is another good play given its structural growth story, said Gaurav Dua of Sharekhan. Besides these, power sector PSUs are also in favor with analysts, while others like public insurers face high competition, they say.
The third is power generation, distribution and finance. Now these are monopolies. They offer good dividend yields, they have low risks and they will provide medium returns. The fourth is consumer facing, stocks like MTNL and insurance companies. Now here the PSUs lag because they are not nimble footed to compete with the private players. The last category is banks. Now banks have performed well in terms of catching up with the private competitors in terms of credit growth, in terms of asset quality, etc. Expectation of divestment can trigger up moves in banking stocks from time to time, and this can be medium-term picks.
Among individual stocks, Samco Securities picks these stocks.
State Bank of India and Bank of Baroda from banks, Railway Vikas Nigam from railways, HAL and Bharat Dynamics in defense, and NMDC and BHEL in power. These are some of our preferred PSU picks across segments for the medium to long term.
That said, the government's divestment drive has been on a slowdown with recent delays in stake sales of Hindustan Zinc and Concord. Any new divestment is also believed to be unlikely in 2023-2024. Thus, divestment remains a key trigger to be monitored, which can boost the related shares. Today, on June 23, markets will track global cues for direction.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.